This is the most exciting time of the month, and this is when we do our monthly market report for what's going on with real estate here in Southwest Florida. And I've got to tell you, there's a lot of action, and it's strictly in favor of one particular set of people. So let's jump right into it. Now, every single month, we go over the statistics for both Lee, which is Fort Myers, Cape Coral, Lehigh Acres, Estero, Bonita Springs, and Collier, which is Naples, Marco Island primarily. And so we're going to go over, these are the year-over-year stats, what's going on in our real estate market, and everything will make sense as far as what we're seeing in the market now versus what we saw last year, and we'll get into it. So, looking at our closed sales, in Collier County, we had 474 single-family properties that closed in the past month. That's actually down 3%, so a slight slower pace of sales from that regard. We have 1,593 in Lee County that closed, and that's down 1%. So both counties, all of Southwest Florida, is down just a little bit in terms of the quantity of properties that sold. Our median price in Collier County is $732,000. That's down 3%. $405,000 in Lee County, and that's down 4%. Now, the interesting story here is that we've seen prices stabilize quite a bit, but if you remember, if you watched my video last month, pricing, the median price in Collier was $775,000. So it's actually down 5% month over month, which is a really big deal, and might be questioning some of the stabilization of prices that is there. So prices definitely have trended down year over year and month over month in both counties. Days on market, we're at 43 days on market. That's up 23%. So it's taking longer for properties to sell. That's been the trend. We've been going that way for a bit of time. And in Lee County, 42 days on market, which is double of what it was this time last year. Now, typically we have Collier County. It's at a higher price point. It usually takes a lot longer, typically about twice as long as Lee County homes do to sell. And they're on par with each other right now. So it's sort of interesting that Lee County is taking a lot longer than it typically does compared to what Collier County is experiencing. So something to look at there. The new listings, we're at 474 new listings in Collier County. That's down 3%, and 1,539 in Lee County, and that is down 1%. So again, we would expect to see, if prices come down, which they've come down, we would expect to see a lot more inventory coming on the market, and that still is not happening. And we've talked about this before. That has to do primarily with the fact that people who have locked in extremely low interest rates don't want to give those up to make a move, and so that's restricting the amount of inventory that's coming on the market, because if they could get a much better rate or a similar rate to what they have, we'd have a whole lot more people that want to make a move, we'd have a whole lot more inventory coming on the market, and then that would affect pricing accordingly. The pending inventory, we're at 628 in Collier County. That's down substantially. It's down 14% over last year, and then 1,816 in Lee County, and that's down 16%. So pending inventory is the indicator of the number of closings that we'll have here in the near future, and both of those are down, so that's going to be a lower number as well. That puts our month supply. So if no new homes come on the market, given the current pace of sales, how much inventory do we have? In Collier County, that's at 4.4 months, which is 38% higher. And in Lee County, that's at 4.3 months, which is 72% higher. Those numbers are very much what we would consider equilibrium, but you can tell based on everything that we've looked at so far that things are favoring the buyers. So it's been a while. So the buyers out there, it's been a while that you've been able to be favored. Now, here's the other deal. So we look at the total dollar volume of the homes that have sold. In Collier County, that's at $496 million, just under $500 million, but that's down 5%. And then in Lee County, it's $626 million, which that's down 7%. So overall, we have less money that is entering the real estate market. And obviously that has a multiplier, that has a trickle down effect on all of the trades, remodels, etc. So less money coming into the market isn't great for the overall market. Now, I mentioned that a lot of things are trending towards favoring the buyers in this current market. The one thing that's not, and all of us are aware of it at this point, are interest rates. Interest rates are not doing so hot. They've actually continued to increase over 7%. And so that's been a very big challenge for people who are looking to get a mortgage. Now, here in Southwest Florida, we have a very unique environment to where we have a lot of second homes, a lot of very wealthy people. And so if we look at the sales in Collier County, it's nearly 50% of all of those transactions that closed actually were cash purchases. And in Lee County, it's about 40% of the transactions were cash purchases. So that demographic, the people who are the cash buyers, they're in the best position to take advantage of the fact that prices have come down, the fact that it's taking longer for properties to sell. They've got a lot more bargaining power, a lot more negotiating power that they can utilize when purchasing property. The people who need mortgages, there are strategies that you can use to be able to help offset some of those increased costs. But between the interest rates and the insurance rates, those are things that are really putting, you know, a bit of a damper on the home buyers who are anxious to get into the market. You look at a segment like the first-time home buyers, and that is one that is challenged. You know, they have significant challenges there, but there are a few things that have happened. And again, there are some programs that can help those people. So not all hope is lost. There are some really potentially good opportunities out there. One of the big segments of the market that we're seeing change is, you know, short-term rentals and investment property. Because interest rates are where they are, it is getting extraordinarily difficult for people to create a cash flow, a return on their investment, to be able to purchase investment property, especially in the short-term rental market, where we're not seeing as much, and this is across the entire United States, but we're not seeing as much demand for that as we had in years past. So that does it. If you could do me a favor and like the video and subscribe to the channel, here's my most recent video, and hope you have an amazing day, and we'll talk soon.